Good morning all, and Commissioner McGuinness, Governor McAloof, ladies and gentlemen, thank you for being here this morning. This is a good opportunity to speak to you today at this conference, a conference that is a significant development in the Central Bank's approach to its relationship with its stakeholders. I am delighted to see Commissioner McGuinness back in Dublin, and she's a very regular visitor here, and she does spend a few days in Brussels as well, I assure you too. One of her first engagements when COVID restrictions were being lifted was to attend a meeting of the Ireland for Finance Joint Committee in Trinity College earlier this year. I chair that committee, and Commissioner and I very much appreciate your time to be with us here this morning. May I also thank the speakers across the panels at the conference yesterday and today. In particular, I want to thank the policymakers, the regulators and the civil society representatives from outside Ireland who have travelled to Dublin and to share your experience with us. I don't know how much added value there is in this for your work, but in participating in this panel discussion here today and our conference, I do know it will be of great benefit to us here in Dublin and in Ireland. There was a very good conversation yesterday which touched on financial literacy and the role Ireland plays as a large global financial centre and how Ireland engages in dialogue and conversation. Of course, there is a challenge around the question of regulation versus consumer protection, and the theme of this conference is about delivering for the economy and the consumer. The conference is one of the actions of the Central Bank which they identified it would introduce when it published its response to its consultation on stakeholder engagement last year. Engaging with stakeholders has been a central feature of my work as Minister of State in the Department of Finance. My brief is a broad one: financial services, credit unions and insurance, and the range of stakeholders who I wanted to engage with has also been very broad. It is not just across these sectors of financial services, credit unions and financial services themselves, but also the varied roles and stakeholders in those sectors that I have met extensively. I've had very many substantive meetings with all the industry representative associations like the Bank Payments Federation of Ireland and Irish Funds, and with executives from many key firms in the financial services sector in Ireland. I've had meetings with officials whose roles are in regulation and policy making both inside and outside of Ireland. At the other end of the scale, from credit unions, you could say, is the international financial services sector. The development of that sector has been part of Ireland's industrial strategy since the 1980s, when we established the International Financial Services Centre in Dublin. 3 decades later, the sector is no longer solely concentrated in Dublin's north inner city. It is now a national one with firms located in the regions right across the country. And that, of course, means employment and jobs in the regions and towns and cities outside of Dublin as well. These jobs contribute to making these thriving centres not only from an economic perspective, but also for social and cultural life. The growth is underpinned by the government's strategy for international financial services, which is named Ireland for Finance. It became clear to me about a year ago that we needed to refocus some aspects of our approach that we were taking in our Ireland for Finance strategy. COVID has seen the use of fintech in the retail sector shoot rapidly upwards as consumers move more of their purchasing to tapping at terminals in shops or to online payments, avoiding shops altogether. Separately, the European Union's work on sustainable finance had moved up a gear with the adoption of the 3 regulations on disclosures, benchmarking and taxonomy. Those developments were very significant, and because of them I decided to prepare an update on the Ireland for Finance strategy. I undertook a substantial consultation process and met a range of people in the sector to gather their views on the challenges and opportunities we face. I was delighted to launch the update on Ireland for Finance last month. Actually, it was one month ago today. And the vision is to grow and expand Ireland as in a sustainable manner, as a premier European financial centre and the location of choice for specialist international financial services. We will achieve this by building on our successes and expanding our product range to deliver more opportunities for people. Our aim is to create 5,000 new financial services jobs by the end of 2026, and a third of these at least will be located in the regions outside Dublin. The updated strategy gives a greater emphasis on two themes. First, sustainable finance, and second, fintech and digital finance. Ireland is uniquely positioned to be a leader in fintech with the combination of its established hub for international financial services and its large global technology sector presenting the ideal conditions for innovation and growth. I've established a joint fintech group with membership from the private and public sector to collaborate and share knowledge on the future policy direction of digital finance in Ireland and in Europe. And the first meeting of that group will take place next week. Transforming the EU economy to make it more sustainable requires large investments, especially for enabling a green and low-carbon transition. The Government wants to make Ireland a leader in sustainable finance. The Government is investing in these skills base for people at all stages of their career and across all sectors of international financial services. In Budget 2023, the Government announced 2,000 new skill net places aimed at upskilling and reskilling the workforce in the areas of sustainable finance, green tech and climate change. The Government recognises the value of education for developing people and social progress. Education has been the cornerstone of Ireland's economic strategy for the last 60 years. When this Government was established just over 2 years ago, a new Department of Higher Education was created with a Cabinet Minister sitting a Cabinet to provide strategic leadership in this area. The Department and its agency do excellent work on enhancing public participation and ensuring Ireland has the appropriate skills base for future jobs growth. One of the key developments under the Ireland for Finance strategy in the last year has been led by industry. It was the launch in April Ireland's Women for Finance Charter. As I mentioned, the Charter is led by industry but is supported by the Government. Its objective is to encourage greater gender balance in the financial services industry in Ireland. The Charter will allow financial service firms to devise commitments to progress gender diversity in their firms. Each firm that becomes a signatory to the Charter will set targets for improving gender balance. Each firm will report annually on a confidential basis, I stress, and on the achievements it has made. And after all of that, the Economic, Social and Research Institute will collate the data from the individual firms and will prepare a report on the overall picture of progress across the industry. So we have independent verification of what you will actually be telling us about your gender balance within your organisations. However, diversity goes beyond the number of women in the workplace or in the leadership roles, including diversity of age, ethnicity, sexual orientation, education, nationality, disability, belief and a lot more. But we have started, as I said, with the Charter for Women in Finance, but we will be moving on to those other areas next. Initiatives focused on both increasing women's participation and achieving broader diversity and participation amongst minority groups will be considered as part of our annual action plan in the Department of Finance. When I was appointed Minister of State, one of the priorities I wanted to address was the cost of insurance and the availability of insurance. The Action Plan for Insurance Reform was designed to help bring down the costs of this key financial service, encourage more competition into the market and aiming to prevent fraud. And this issue became more acute as a result of Brexit. Some of the key policy levers to achieve these objectives lie outside the Department of Finance. So the Government set up a Cabinet subcommittee specifically on insurance reform, chaired by the Taoiseach, and it includes the Department of Justice and several other departments who contribute to this work. The third implementation report on the Action Plan for Insurance Reform will be published in the coming weeks. It will show huge progress by the Government in delivering meaningful reforms. These are evidenced by the large counter-inflationary reductions in motor insurance that we've experienced in Ireland in the last couple of years. We believe these reforms will grow the liability market and deliver for businesses, community groups and sporting organisations. It is important that insurance companies continue to react to these reforms and pass on savings and benefits to the public in terms of reduced premiums and increased risk appetite. The credit union sector is probably unique amongst those I've worked with over the last 2 years, and I think many people from outside the state here won't appreciate how very developed credit union sector we have in Ireland compared to many other European countries. The local credit union and its role it can play in the economy and communities is more important now than ever. We have over 200 credit unions with over 450 offices, and in many towns around the country, they're the only financial institution left standing when some of the banks have either withdrawn or closed their branches. It is the not-for-profit and very much all about small savers and small borrowers. And on that front, for me, it has been a very busy year. The commitment in the programme for government to review the policy framework for credit unions is now completed. In July, proposals on foot of that review were approved by the government, and the credit union bill is now priority for publication in the coming weeks to be dealt with in this Dáil term before the end of the year. The legislative changes being put forward as part of the review will be helpful, but they will not solve the financial and business model challenges facing the sector. That's a matter for the sector to look after their own business model, and it shouldn't be dictated by the government. But we're here to enable and assist, but the sector has to do its own business at the ground level. I think it is useful to remind ourselves of the aim of the bill, and it's namely to strengthen the role of credit unions as providers of community banking. The bill will help credit unions further collaboration and deliver a wide range of products and services to seize the opportunity arising from changes in the retail banking market, which I've just referred to. One of the more significant reviews at the moment is required by the Payment Service Directive, which you'll all be familiar with. The current iteration of this directive, known within the policy world, is PSD2. The 2 is because the current version is the second Payment Service Directive. The PS2 directive review is ongoing at the moment, and the report is expected next year. Let me mention some of the key areas that we in Ireland will watch for in that review when it is published. One of them is the strong consumer authentication, known as SCA. This kicks in when you make an online purchase that costs more than €30, and you then need to go through additional security requirements. Industry in Ireland and the rest of Europe experience a number of problems implementing strong consumer authentication. Industry representatives raised this with me at the quarterly meeting of the Ireland for Finance Joint Committee in June and again last month, and it is very much on the radar for the Department of Finance to watch that particular issue. Another area under review is the prevention of fraud, and strengthening protection for payers is a topic we will also watch. A second area of EU policy that has generated a lot of work for my officials is in the area of anti-money laundering and countering financing of terrorism. Last year, the European Commission proposed 3 major areas of work dealing with the use of cryptocurrencies for money laundering, setting up a new European-level supervisor to harmonise and coordinate activity on anti-money laundering across the EU, and to put in place a new rule book for anti-money laundering. A particular point my officials in the detailed negotiations on these measures is that Ireland is now the only major common law jurisdiction in the EU as a result of Brexit. So finally, in conclusion, across my brief as Minister of State, there is a substantial body of work that has been delivered and will continue to be delivered. Much of this work is detailed, complex and technical, but is designed with stakeholders in mind and grounded on important objectives of meeting the needs of the people of Ireland. Thank you for your time here this morning.